Does it ever feel like the game is rigged? If you stared at the XRP chart, watched it lag while everything else seems to take off, and felt that gut-wrenching suspicion that powerful forces are at play, you're not alone. You're not paranoid, and you're not just being impatient. You might be seeing the strings that are meant to stay hidden. For years, the story has been frustratingly similar. Lawsuits, regulatory fog, and a price that feels chained to the floor. No matter how good the news gets, the mainstream media won't tell you this. But that feeling isn't a mistake in the system. It might just be a feature. It could be a deliberately engineered environment designed to do one thing: shake you out of your position before the real money arrives. And now, the biggest money on the planet, BlackRock, is at the center of a storm of speculation. Officially, they have no interest in an XRP ETF, calling an infamous filing from 2023 a hoax. They want you to believe it was all a mistake, just random noise in the crypto market. But what if the chaos was the point? What if the bizarre fake filing, the price spike, and the immediate crash weren't a hoax, but a test? A smokescreen to hide a much larger operation. I spent days, weeks even, looking at the charts after that fake BlackRock ETF news hit in November 2023. Nothing about it made sense. The price action, the swift denial, the way the story just vanished. The official narrative felt weak, like a cheap suit trying to cover up a multi-trillion-dollar secret. So, I started digging into a theory that's been gaining traction in the community. I followed the timeline, cross-referenced BlackRock's public statements, and looked at historical precedents from Wall Street. What I found was a pattern that points to one explosive theory: that the world's largest asset manager isn't ignoring XRP. The theory claims they are intentionally suppressing its price to accumulate a massive position on the cheap before they flip the switch and send it soaring. In this video, we're going to connect the dots of that theory. We're going to follow the breadcrumbs and explore the inside scoop they hope you never see. Before we dive into the clues, you need to understand who we're talking about. When we say BlackRock, it's easy to think of them as just another big Wall Street firm. That is a catastrophic understatement. BlackRock isn't just a player in the financial world. In many ways, it is the financial world. As of 2025, they manage over $10 trillion in assets. To put that in perspective, that's more than the GDP of every country on Earth, except for the US and China. They are the largest asset manager on the planet, with influence over pensions, governments, corporations, and now digital assets. When BlackRock moves, markets don't just react. They are fundamentally reshaped. Their entry into Bitcoin with their iShares Bitcoin Trust wasn't just another ETF. It was the starting gun for a new era of institutional crypto adoption. It signaled to the rest of Wall Street that the game was on. Their CEO, Larry Fink, once a vocal crypto skeptic, has now become one of its biggest proponents, calling Bitcoin a flight to quality. So when this $10 trillion gorilla makes a move, you have to ask why? And more importantly, when they publicly state they have no plans to do something, should we take that at face value? Their official position, repeated in August 2024, is that they have no current plans for a spot XRP ETF. They want you to think they're focused on Bitcoin and Ethereum, but this is high finance, a world of calculated misdirection. In this world, you don't just listen to what they say, you watch what they do. And what if their actions are telling a completely different story? This brings us to a theory circulating in the XRP community, that BlackRock, possibly with other giants, is actively suppressing the price of XRP. Not because they think it's worthless, but because they know it might be priceless. To understand the why behind this theory, you have to think like a predator. Why would an institution with $10 trillion want to keep an asset's price artificially low? The answer is simple and brutal: accumulation. Imagine a high-stakes game of musical chairs. There are 100 chairs and 100 people circling them. When the music stops, anyone with a chair becomes fantastically wealthy. Now, imagine one player is a giant who knows exactly when the music is going to stop. What's their strategy? Do they run around frantically with everyone else? No, that's for amateurs. A giant moves slowly. While the music is still playing, they quietly start removing chairs from the game, buying them up and hiding them away. Then, they start spreading rumors. "This game is rigged," they whisper. "The chairs are broken." People start to panic. They get tired and sell their claim to a chair for a fraction of its future worth. And who is there to buy it? The giant, smiling in the corner, adding another chair to its stockpile. This is the accumulation phase. And according to the theory, it's the pain the XRP community has been living through. The frustration of seeing positive news, partnerships, court victories result in little price action isn't a sign of a weak asset. According to this theory, it's a sign of a coordinated suppression campaign. The goal is to create maximum psychological pain, to make you doubt your own research, and to make you sell. You sell because you're tired of waiting. You sell because of FOMO on other coins. You sell because the very institutions believed to be orchestrating the suppression also influence the media narrative. Every time someone sells out of frustration, they could be handing over their chair to the players who can stop the music. They want to own as much of the supply as possible before they announce their own ETF. They don't want to buy XRP at $10. They want to buy it at 50 cents. They want to buy it from you. The theory suggests the low price isn't a reflection of XRP's value. It's Wall Street's window of opportunity. They are banking on your impatience. Now, I know what some of you are thinking. This sounds like a conspiracy theory. And you're right, it is a theory. But it's a theory grounded in a long history of documented fact. The idea that major financial institutions would manipulate a market isn't speculation. It's a recurring theme. Let's go back to 2020. The Department of Justice and the CFTC hit JPMorgan Chase with a staggering $920 million fine. Why? For a scheme lasting over 8 years to manipulate the precious metals and U.S. Treasury markets. Their traders engaged in a practice called spoofing. They would place huge orders to buy or sell assets with no intention of executing them, creating a false impression of supply or demand to move the price where they wanted. Once the price moved, they'd cancel the ghost order and make their real trade, profiting from the artificial movement they created. They did this thousands of times. It wasn't a rogue trader. It was a systematic enterprise. And the $920 million fine for a bank that makes tens of billions in profit, that can be seen as just a cost of doing business. It proves the risk can be worth the reward. This isn't an isolated incident. The history of finance is littered with examples of price fixing and market manipulation, from the LIBOR scandal to the 2008 financial crisis. These institutions have the motive, means, and a track record. So when you look at the newer, less regulated crypto markets, is it a stretch to believe they'd apply the same playbook? To think they would see an asset like XRP with its clear utility and growing legal clarity and decide to play fair? Or is it more likely they'd see it as a chance to use old tricks in a new playground? The precedent is clear. If they did it to gold and US government debt, the idea that they wouldn't do it to a decentralized digital asset isn't just naive. It's worth questioning. This brings us to the centerpiece of the theory, the bizarre fake BlackRock iShares XRP trust filing in November 2023. Let's revisit what happened. Out of nowhere, a filing for an iShares XRP trust appeared on the official website of the Delaware Division of Corporations. It mirrored the structure of BlackRock's legitimate Bitcoin and Ethereum ETF filings and even listed a real BlackRock executive. The market went into a frenzy. In just 30 minutes, XRP's price shot up by over 12%, but just as quickly, it all came crashing down. Journalists and then BlackRock itself denied the filing was real, calling it fraudulent. The price collapsed, wiping out all the gains and leaving a trail of liquidations and shattered hopes. The official story is that it was a hoax, that some unknown person managed to file a fraudulent document on a state government website. The story was quickly swept under the rug. But let's apply some critical thinking. Does it make sense that a random person could so easily and professionally impersonate the world's largest asset manager on a government website? What was the end game? A 30-minute pump? It seems like a lot of risk for a chaotic outcome. This is where the theory takes a darker turn. What if it wasn't a random event, but a strategic operation, a dry run? First, it served as a perfect test of the market's raw reaction to a BlackRock XRP ETF. The 12% jump showed them the immense pent-up potential. Second, it could have been a probe to test the response times of media and regulatory bodies. Third, and perhaps most importantly, it was a classic psychological operation. The incident burned countless traders and reinforced the narrative. See? Any good news about XRP is fake. It's never going to go up. This is exactly the sentiment you'd want to foster if you were in a covert accumulation phase. It doesn't look like a prank. It looks like a professional hit, an accident that had all the hallmarks of a planned demolition. If an institution plans a major move, they need people who understand the asset. And this is where the trail leads to an interesting individual at BlackRock. BlackRock's head of digital assets, the man leading their crypto strategy, is Robert Mitchnick. Before taking on this powerful role, he worked at Ripple. That's right. The person guiding BlackRock's crypto efforts has direct experience with Ripple and its ecosystem. Is it just a coincidence that the expert tasked with evaluating digital assets for BlackRock has an intimate history with the one asset they publicly have no plans for? In corporate strategy, that's not a coincidence. It's a signal. You don't hire a former Ripple executive to lead your digital assets division if you think XRP has no future. You hire him for his expertise when the time is right. Then there's the calculated silence from the top. In a Fox Business interview, CEO Larry Fink was asked directly about an XRP ETF. His response was not a simple no. He paused and said, "I can't talk about that." In the highly regulated world of finance, that phrase is loaded with meaning. He can talk about Bitcoin and Ethereum, so why is XRP off limits? Some interpret this as a classic sign that he could be bound by a non-disclosure agreement, NDA. An NDA would legally prohibit him from discussing potential plans. And who might he have an NDA with? The most likely candidate would be Ripple. There's a widely circulated, though unverified, rumor in the XRP community that Ripple has over 1,700 NDAs with various institutions. Isn't a stretch to think BlackRock could be one of them? Larry thinks "I can't talk about that" isn't a denial. To many, it's the loudest yes. He could give without triggering a legal firestorm. Let's fast forward to our hypothetical scenario in November 2025. The landscape has shifted dramatically, and the excuses for holding XRP down are vanishing. The SEC lawsuit that hung over XRP for years is now largely in the rearview mirror. While Ripple paid a penalty for early institutional sales, the court's decision brought valuable regulatory clarity. The ruling that programmatic sales of XRP on exchanges were not securities offerings was a landmark victory. As of August 2025, in this scenario, XRP is trading with a level of legal certainty that few other assets have, and its price is hovering in a hypothetical $2.90 to $3 range. With this clarity, the floodgates for institutional products have begun to open. In July 2025, the US market saw the launch of its first XRP exchange-traded product, the ProShares Ultra XRP ETF, UXRP. Now, it's important to understand this is a leveraged futures-based ETF, not a spot ETF, meaning it tracks futures contracts, not the underlying asset itself. But the significance is huge. The SEC's comfort with a futures ETF signals to the market that US regulators are open to publicly traded XRP products. And what happened next? The rest of Wall Street took the hint. We now have public filings for spot XRP ETFs, the holy grail. from major players like Bitwise, Franklin Templeton, and 21 Shares, all under SEC review. The race is on. And yet, where is BlackRock? The $10 trillion gorilla that started the Bitcoin ETF frenzy is conspicuously absent. While their competitors rush to get their spot XRP ETFs approved, BlackRock remains publicly silent. Why? Are they really going to let firms like Bitwise and Franklin Templeton eat their lunch? Or is their absence part of the strategy? Are they letting smaller players test the regulatory waters, only to drop their own filing at the last second and dominate the space? In the context of everyone else's actions, their silence is what many find most compelling. Now, what we've covered here is just the tip of the iceberg. This is a story that evolves every single day. If you want to stay ahead of the curve, get access to deep dive research, and receive breaking updates before they hit YouTube, you should join our private community. Check out the link in the description to our Patreon and Discord group, where our community of researchers shares information 24/7. It's the single best resource for anyone serious about this space. And while you're down there, if you're looking to take self-custody of your digital assets, which is more important than ever, you'll find links to the hardware wallets our team personally uses. So let's step back and look at the whole board. This isn't just a collection of random events anymore. When you lay all the pieces of this theory out, a chilling picture begins to emerge. It's a playbook for the institutional takeover of a digital asset. First, the theory identifies the motive, the desire to accumulate a world-changing asset at rock-bottom prices. Second, it points to the precedent. This isn't a crypto fantasy. It's business as usual for some on Wall Street. The JPMorgan spoofing case is documented proof that institutions have manipulated global markets for profit. Third, there's the accident. The fake ETF filing in November 2023 is seen by theorists as the perfect market probe and psychological weapon, all under the plausible deniability of a hoax. Fourth, you have the inside man and the telltale silence. An executive with direct Ripple experience, Robert Mitchnick, is positioned at the head of BlackRock's digital assets division. And CEO Larry Fink doesn't deny the plan. He says he can't talk about it, a phrase loaded with implications. Finally, there's the conspicuous absence. As we stand here in late 2025, every major competitor is rushing to file for a spot XRP ETF, except the biggest player of all. BlackRock is watching from the shadows. When you connect these dots, the theory's conclusion becomes almost inescapable. The frustration and lagging price may have been manufactured. It's a grand, orchestrated campaign to keep XRP contained long enough for the architects of the new financial system to secure their positions. So did BlackRock intentionally take down XRP? Let's be clear. There is no smoking gun. You won't find a leaked email from Larry Fink with the subject line, Project Screw Over XRP Holders. These people are far too sophisticated. We may never have absolute, undeniable proof, but the court of common sense doesn't require the same burden of proof. The pattern of evidence presented by this theory is compelling. The motive is clear, the methods are historical fact, and the behavior is deeply suspicious. While we must label this a theory, it is the one theory that seems to logically connect all the bizarre events surrounding XRP and BlackRock. What this means for you is a potential reframing of your position. If the theory is true, you are not a disappointed investor holding a lagging asset. You are an early holder of a deliberately suppressed asset that the most powerful financial institution in the world may be trying to accumulate on the cheap. The frustration you feel isn't a signal to sell. It could be the confirmation that you hold something valuable. The future outlook, therefore, could be incredibly bright. Suppression can't last forever. With regulatory clarity established and spot ETF approvals looking more like when, not if, the final pieces may be falling into place. Analysts are running numbers on what a post-suppression ETF-driven XRP looks like, with speculative targets ranging from $7, $10, and even higher in the years to come. These are, of course, just predictions. but they are based on the inevitable mechanics of a supply shock. What happens when trillions of institutional dollars, led by BlackRock, finally get the green light to enter a market with a finite supply? So, as you move forward, remember this. The game might be rigged, but you've been given a glimpse behind the curtain. You may not just be holding a cryptocurrency, you could be holding a piece of future financial infrastructure. An asset so important that the gatekeepers of the old system might be doing everything in their power to control the keys to the new one. Don't let their psychological games wear you down. Don't let impatience betray your research. The next time you feel that frustration, remember the theory we have laid out today. Remember the musical chairs. Remember JPMorgan. Remember the hoax. And remember Larry Fink's telling silence. Know what you hold. Understand the game that might be being played at the highest levels. The greatest transfer of wealth in history could be underway, and the battle for its core assets is happening right now, disguised as boredom and frustration. Hold your ground. Your conviction is the only thing standing between them and your seat at the table. The night is darkest just before the dawn.